it seems to me that Trump is okay with a recession. I think he sees that there's going to be pain before there's any gain. And I think we'd all agree that there has to be. And he looks like he's taking that on, trying to push a recession, which would maybe drive more uncertainty, drive more firepower towards the absorption of short-term treasuries, which would then decrease the debt that the country has to pay. We know that hasn't changed the long-term end of the curve, because we've seen those rates, they've been coming back down again a little bit, maybe towards a recession. But all this is all interplayed amongst the global economics. We have tariffs, which are, I guess, typically inflationary, but then again, short-term pain for long-term gain. That's a lot right there. So I'll let you grab what you want to, like a ball player out in the field. You snag whichever ball you want to, and let's go.
It's easy to feel confused looking at what Trump is doing and seeing how disruptive it is. And certainly there's plenty of pundits who will critique it on the basis of the uncertainty it creates and the volatility that it also creates on the basis of that uncertainty. I think to appreciate what he's trying to do is a helpful starting point. And our best lead on figuring out what his playbook is would be reading Stephen Moran's 41-page paper from November of last year. So he's working in the private sector and was likely to be tapped to be the head of the Economic Council, and that's what he's been nominated to become. So reindustrialization is a priority. Privatization of the economy and moving away from the government sector being as large a piece as it is a priority. And the net benefit of reindustrialization is that you reconfigure the global trade system, and instead of running massive trade deficits, you come closer to balance, where we're importing less, we're exporting more, and those two things kind of balance each other out, instead of driving huge surpluses with producing companies and countries all over the world. And so that reindustrialization, privatization of the economy, and seeking a trade balance, these are the priorities. There's a lot of change involved in that. And when you're re-engineering a global trade system, there's going to be a lot of people not happy about that. So if you look at our global trade partners, it's a net negative to them. It's potentially very positive for us in terms of an increase in quality jobs and pay and domestic consumption, which can continue at even a more robust pace. You have to assume that we go into recession because the government sector is a large enough piece that if you shrink it back and you have not kind of one for one at the same time replaced it with private sector jobs, you're going to hit GDP growth. Right. So the economy, I would say, has to take a hit in that transition process. Their hope is that it's not a very long transition process, and they'll become roaring back with much more predictable 3 and 4% GDP growth instead of sort of the anemic 1s and 2s that we've seen for many years now. So I think that's the goal. And it does represent some significant risk for particularly those who are in the investment world and over leveraged, have overplayed their hand. $930 plus billion in margin debt. So investors who are so confident that the stock market only goes up, they borrowed close to $1 trillion in house money to double down, they're in trouble. Right. Hedge funds in trouble. Any of your leveraged speculators, they're really feeling this pressure. Last week, carried over into this week, arguably we're putting in a market top. And so these are just the early stages of decline in terms of the financial markets. And Stephen Besant has basically said that we're not concerned. I think I got his first name wrong, but Mr. Besant, as it were, has basically said we're gonna have to go through a detox period, which is their way of saying, yeah, we're gonna have a recession. Then when you use the R word,
no, it does.
Yeah, detox. For anyone who has read the literature, it's a painful process, but one that they hope cleanses the system and puts us on a much better footing for generations to come. Risk worth taking, I suppose, if they can deliver on it. If they succeed, there's clearly execution risk. You don't necessarily get to implement and succeed going from ideas to reality. But again, I'm not hearing anything other than the Moran paper about what the strategy is, it just seems to be very haphazard, on again, off again. And I think that's where a lot of the uncertainty is coming from within the financial markets, and where a lot of the punitive language in the media is sort of attacking the White House and saying these guys are just crazy. They should all be in white jackets and locked away. I think they've failed to appreciate what the strategy is. So that's in a nutshell. I think that's where we're starting from.